Well, meanwhile, the markets have stayed pretty positive today, in positive territory, I should say, as better than expected tech earnings reports came out. The Dow is up as CVS and other health companies join the ranks with strong earnings reported today. The S&P is headed for its best performance since August. Now, to get all of this into perspective, we're joined by chief economics correspondent for the Wall Street Journal, Nick Timiraos. Nick, thank you for joining us. A lot of investors to weigh right now, the shrinking economy and positive earnings numbers. So what is the view from Wall Street right now? It's hard to tell each day because it feels like we're on this roller coaster ride.
That's right, Liz. The market right now seems to have a case of ADHD. It focuses on whatever is, top of mind today. It's strong earnings reports for the technology services sector, and they're sort of taking their focus off of tariffs. But I do think the big story in the economy right now continues to be Donald Trump's trade war. The tariffs have been broader than expected. They've been imposed somewhat haphazardly, and that is going to leave a mark on the goods producing sectors of the economy. You think about everything that transports goods, from freight to shipping to logistics, warehouse jobs. All of that's tied up in this. And so today, of course, the market's focused on strong earnings reports from the tech companies, but every day it feels like a little bit of a push and pull between the non-goods and the goods-producing sectors of the economy.
Yeah, it was interesting because at his cabinet meeting yesterday, President Trump said Americans may just have to spend less as they feel the pinch on prices from these tariffs. So how is this likely going to impact consumer spending?
Well, so we saw in the GDP report yesterday these really large distortions in the first quarter. And so even though the headline number was negative, a lot of that was because businesses were front-running the tariffs. When they import a lot of goods, imports don't get counted as domestic production, right? GDP is gross domestic production. They could show up later in consumer spending or inventories. Those sometimes aren't counted as well. And so we have these sort of accounting shifts here, and that's leading to a negative GDP print, even though consumers continue to spend. And when you hear companies right now on their earnings calls, they say that they're able still to pass prices through. So the price increases that are coming from these higher import taxes could end up affecting consumers as the inventories get depleted here that companies have sort of stockpiled on to get ahead of this.
All right, Nick Timiraos, thank you so much.